Hi everyone, this is an employer national insurance update with all the changes that are going to happen from April 2025. If you are a company owner and a director and you've got salary running through payroll, you want to watch this video. Now I'm going to get it. This is what's changing. Employer national insurance. Most people are like, what's that about? And basically, this is the tax that the government asks you to pay from your company for employing people through the PAYE system. What is happening is the changes is that currently, well, I'll write this down, it is 13.8% and it kicks in from salary or income over 9,100 annually. And you do get a allowance if you've got two or more people, and that probably gives you some ideas. If you've got two or more people, i.e. there's special rules for directors on PAYE, you can currently claim a 5k allowance. What that means is the first 5k that was qualifying is done at zero. What's happening is the changes going forward. All of this fun is changing. Put the old red here so you can see. What's changing is the 13.8% is now becoming 15%, whopping 15%. The 9,100 is actually becoming 5,000. Yes, you heard it right, 5,000. And that's where the problem is. But the allowance is actually going up. And in some circumstances, you may do better, but most circumstances, you are not going to do better. The problem comes now is if you're the only person on payroll, you can no longer do a salary without having to pay tax on 9,100. You're going to have to do it at 5,000, which causes another problem because one of the benefits of running payroll, I'm going to put it down here, provided your income is over something called the low earning threshold, is that you get a pensionable year for state pension. So state pension year. So you need, for most people, you need about 35 of these years if we do have a state pension. It has to be over a certain income, which is called the low earnings threshold. State pension year, every year you have to earn over 6,396. That's for 23, 24, 25, and this is changing from 2025, 26. And what's going to happen is this amount now is going to become 6,500. Okay, so state pension year, 35 years, 6,396 per year at the moment annually, going up to 6,500 annually. Right, so what can you do? How do you plan for this? Option one, do nothing and pay the tax. If I was going to work the tax out quickly, if you do nothing, pay the tax, which is 9,100 minus 5,000 times by 15%, which equals my number, got the calculation for you, £615 extra tax. Number two, you speak to a good accountant, tax advisor, you do a tax plan, and what you could do is potentially add someone else to your payroll and pay zero in extra tax because you can claim the 5k allowance, which has now become 10.5k. Also, what you can do is another issue is going to be when you've got more than one set of people, and depending on how much money you're paying them, being smart how you pay them. So now, unfortunately, if you've got loads of people part-time, I'm going to put here, you're going to have to plan for them because the cost of having loads of part-timers has just gone, because once you use the additional allowance, and that will go quite quickly, you'll end up paying additional 15% in tax. I'm going to call it employers NI. So this is why you need to speak to your accountant or a tax advisor to help you plan for this, because if you don't, the taxes are going to end up hurting you quite a lot. I hope this made sense and gave you some ideas why you have to have a conversation before the year starts, and this will kick in from 6th of April 2025. That's when the changes are coming in. I hope it made sense to you and hope that's added some value. Thank you. Please do like and subscribe to our channel. It really helps to getting the ideas out to people and hopefully helps them keep a bit more money in their pocket. Thank you so much.